Immigration, entrepreneurship, education have been the three big things that showed me how life can change. How early do we invest? The answer is it's never too early. The real unique skill that we've built as a team is how to find founder potential in people where that founder signal is not clear yet. What kind of judgment have they applied? What decisions did they make? What risks did they take? That gives us the signal that helps us invest in people before there's a product, before there are customers, before there's revenue.
Hi everyone, my name is Vasil Dab. This is Raisable Founders Hub, where we help to turn entrepreneurs into raisable founders by mentorship, by educational programs, and connections here in Silicon Valley. And my today's guest is Nitin Pachisia. Nitin is founding partner of Unshackled Ventures, pretty active Silicon Valley-based VC firm that focused on supporting immigrant founders.
That person who was born to be a coconut farmer today runs a company valued at $100 million. That's what we do.
Hi Nitin, thank you very much for joining me today. I really appreciate your time. I found a lot of impressive numbers on the website. Can you tell us a little bit more about the work you do?
Yeah, the numbers are part of the story. I think the real work is the people behind those numbers, right? And I think what gives us most energy is I get to live at the intersection of immigration and entrepreneurship, which happen to be two of the biggest forces of change in my life, right? So immigration, entrepreneurship, education have been the three big things that showed me how life can change. And so the fact that for 10 years I get to work with the most brilliant people from all over the world who are making US their home. And, earlier we were chatting about how you came here and, you felt this was home 2005. That was my story. That's really the joy, is meeting these brilliant people and finding opportunities to collaborate on the change that they want to bring to the world. We're fortunate that we get to do that and amplify their time in the process of doing that. For context, when Manan and I started Unshackled, we weren't aspiring to become VCs. We were happy to be entrepreneurs just building software companies, and we still are entrepreneurs. We are entrepreneurs by function, VCs by trade, right? So our business model is venture capital, but really what we're building is a place where anyone who was not born in the US just by virtue of where they were born, but now want to build companies in the US, can collaborate with each other, ideate, provide support to each other. And that's how this community is going to foster. The venture continues to be the business model to support these entrepreneurs with capital and resources.
So that you invest into solo founders. It was highlighted on your website.
Yeah.
Can you tell us a little bit more about that? Why?
There's a lot of ways to build a company, right? I think what has happened with glamorization of VC and certain philosophies around what has been the more common way of building companies has come about to be you have to have a co-founder, right? Because there's some data around companies with 2 or 3 co-founders do better than a solo founder. That was also conventional thinking for VCs, and you've seen how solo VCs are doing really well. So our view is there's a lot of different ways of building a company, and it really comes down to the founder or the team to figure out what is their authentic way of building a company. And for some people, it's a better use of their time to just get down and start building. And part of building is building their founding team instead of focusing on I need to find a co-founder. Also appreciating that a co-founder relationship is kind of like a marriage, right? It's a very delicate delicate relationship that has to be built on trust, respect, understanding each other, chemistry. You can't just say, okay, you and I met yesterday at some event and let's go start building a company. There's a lot to be figured out. So we don't try to put founders in that same mold of you have to have a co-founder. When we meet a great founder who's just happy building solo, we'll invest in solo founders and then help them build the founding team that they need around them and continue to grow the company.
Mm-hmm. So how early do you invest? What I understood from the website that you invest pretty early.
Yeah,
And in the same time, I found that on every million that you have invested, you help to raise additional 30 million.
it's a great stat. I'm glad you picked on that. How early do we invest? The answer is it's never too early. We have never passed on an opportunity because the company was too early for us. We have passed because it was too late. So, if it's progressed, there's revenue, there's other investors who can now see those signals and invest. Then we have to ask ourselves, why are we still so lucky to win this investment? But we love really investing pre-product, pre-revenue, because the real unique skill that we have built as a team is how to find founder potential in people where that founder signal is not clear yet. There are some patterns that the industry has looked at, such as what school did you go to. So if you went to Stanford, Harvard, MIT, because those schools have produced great founders, people are tracking you, right? VCs are tracking you. If you worked at certain tech companies, VCs are tracking you. But that kind of pattern recognition starts shifting to, or becomes the antithesis to what has been the success for investors, which is outlier founders. If everybody starts following the same pattern, there will be no outliers, right? Everybody's following the same pattern. So our kind of thinking is, let's go beyond those patterns. Let's look at what's unique about each person or the team of people that are looking to build something, and look for signals that show us that there's a potential that this group of people could become large company builders. And so a lot of our conversations are about kind of what our opening was. Where were you born? Where did you grow up? What were events that happened, decisions you made, judgment you applied to get where you are today? So you could say, like, someone who went to University of Michigan and did great and now is looking to start a company. University of Michigan is not what defines them. What really happens is they were born in Nepal, and then they had to do certain things to stand out and find their way to get to University of Michigan. And now their other chapters are being written, and like, we really enjoyed that part of getting to understand your distance travel. Judgment as an entrepreneur is a big thing that I try to look for. And when you try to appreciate people's life stories, you get to see what kind of judgment have they applied, what decisions did they make, what risks did they take, and how did they manage those risks to get to where they are. And that gives us the signal that helps us invest in people before there's a product, before there are customers, before there's revenue. And then we become the signal to the rest of the industry. Because now, when Shackle's invested, now you're working on your idea full time, you're building the product, you're selling. Those signals now start appealing to VCs who want to take slightly later risk, right? So we love that really raw human talent
I love that.
aspect of
It
investing.
resonates with me pretty much. Can you tell us how much do you usually invest? And so when you invest only into a founder, it's like no cap, no valuation at that point, or you have some metrics for it?
There is a valuation cap. We don't like, so the way of thinking of the business model from a VC standpoint is, what kind of ownership do we need to return the fund, right? So it's really a portfolio construction analysis. And our view as that very first investor who's coming into the company is, we want to start at 10 to 12% ownership. So if we start doing no caps, we don't know what ownership will be. We really work with the founders to figure out what is the right check size for them in terms of just enough capital from us that will help them turn the next card. The next card, what that is different for each team, each situation. But usually these checks, the pre-seed checks, range between 150K and 750K. A lot of different variables that determine what's the right amount, but a lot of that is informed by the founders themselves. Active conversations that we have with the founders, and that then leads to, okay, if you need 400K, let's figure out what kind of cap will that be to get us the 10 to 12% starting ownership. We also look at it as initially just our check. We don't wait for other co-investors. We don't wait for a whole syndicate to come together. But usually there are other investors the founders are talking to, angels, and so we'll consider what is the right time to bring those investors in. Because pre-seed is kind of a spectrum. In fact, pre-seed and seed, the whole thing, it's a spectrum, and so you can raise as needed as you make progress, and as the risk profile of the company changes to start appealing to people who want to take slightly lesser risk or is producing signals that others appreciate.
When I first came to Bay Area back in 2017, I was ready to win. It was my first visit. I came to win, like in a few weeks.
Yeah.
And in one of the meetings with investors, one guy gave us so many red flags. I was very disappointed, but still very thankful because actually someone told us the real picture. And one of the questions he asked, "What is your legal status here?"
Yeah.
And he was like, "Are you just visitors? You just came with a visa, so you come here, visit, and go back?
Yeah.
So we don't like it." And I found, and it's actually pretty unique on the VC market here, that you help also founders not with funds only, but with navigating the complex US immigration process.
Yeah.
And actually, founders can build companies instead of taking care of really complicated
Immigration.
questions.
Yeah.
Yeah, so can you tell us why did you decide to do it? And
For that exact reason, like I started my first company in 2012. I had been in the US for 7.5 years at that time on H-1B visa and occasionally on B-1, B-2. After spending all this time in the US and working at a startup which was VC backed, when I tried to go full time on my company, dozens of attorneys told me, you cannot do that. You're on H-1B, you need to work for somebody else. That was a shock to the system, right? Because I was assuming immigrants have been so successful, like this problem has been solved. VCs or lawyers, somebody has figured out the solution to it. Part of me was disappointed that this hasn't been solved yet. Other part of me, the entrepreneur in me, got even more determined with every conversation is like, I'll show you that I will build this company and I'll show you that there's a way. But in doing that, while I figured out a way for myself, what I also realized is I spent a lot of time becoming an expert at immigration, which was time I could have spent building my company, right? So it's the same calculation for you and any other founder who is not born in the US and is not a US citizen yet. They have to make a choice. Do I become an expert at immigration or do I work with someone who knows how to figure this out? So between 2012 and 2014, when this was going on, I came to a conclusion that no one has solved this problem, and this is a problem for thousands of immigrant entrepreneurs who are really ambitious. They are determined to build a better future for themselves, for the community, for the country, and they're going to create jobs here, right? They're going to create wealth here. This is how America has always succeeded, is through entrepreneurship. So I took all that learning and I said, I'm going to create a structure where founders can just build, and we're going to create an R&D lab where we can take over immigration for the founders, right? We didn't have to invent employment or visa sponsor. All of this existed. All we had to do was create a structure that combines the R&D lab model with the VC model and enough fluidity. So we had to figure out like tax laws, IP, securities law, employment, immigration, all the legal stuff, which was work, but not impossible work. Like it's not rocket science. It's not more difficult than what most of our portfolio founders are figuring out. So like putting it all together, and it's helpful that for both Manan and I, doing that legal engineering and creating the structure to enable founders to just work freely, let us take care of immigration, that was in our strong suite. Like that's what we know how to do. We figured things out all our life. And that's how we overnight became VCs, because that was the right business model to do it. The funniest part of all this is I was shocked to learn that this huge of an opportunity was left untapped, right? When VCs are trying to figure out like expertise on recruiting and design and business development, how do you leave this big of an opportunity out there, right? Because it's so personal. Like if you unlock the time that someone is spending working at a tech company or staying in academia or staying outside the US when they could be building a company here, you're leaving a lot of untapped talent just out there. And so for us, it became a great slam dunk opportunity to go and take it. And it's been great 10 years of fun, and we're only getting started. There's a lot more to come.
very interesting. So do you have in-house lawyers work for you or
We
it's partners?
we brought in immigration lawyers as partners. So not just hired in-house lawyers, but made them partners in the firm so that every time a portfolio founder succeeds, the fund succeeds, the GP succeeds, and that's when the lawyers see their success. So everybody's interest is aligned to one thing: amplify the founder's time, right? So if you are great at learning how to build Rocket, you focus on that. We'll take care of everything else. We'll do it in a way that we're not just doing what's needed right now, but we're thinking ahead for you. What's going to come up in 2 years? What's going to come up in 4 years? Building this company is going to take a long time. So our legal team, because they're partners and because they're so invested in the founder's success, do all of that thinking work for, we should be working on these 4 different visa strategies for this founder in parallel, and we should do the green card, and there's 2 different green card pathways for this founder. So we're going to do all of those, and that's only possible because they're partners in the firm. If they were service providers, right, you can't pay people enough to do this, and so the incentives alignment is a very critical thing, and we're glad we did that 10 years ago, and Michael and Reed are still partners in the firm and still going.
That's very valuable. Do you usually invest in first-time founders, or you
Yeah.
prefer second-time founders?
A lot of our founders are starting their first companies with us. Some of our founders have started companies before in the US. Some have started companies overseas before they came to the US. So it's a mixed bag, but I would say predominantly they're building their first real scalable company in the US.
When it comes to the first year building a company, yeah, many startup founders make same mistakes,
Yeah.
I would say. One of them was also highlighted on that meeting I mentioned in 2017. So we were pretty sure that having our successes in our native country, we were pretty well recognized in the market. We were market leaders. We had a lot of paid customers, thousands. So we were too smart to listen to some mentors or advisors. And right now, being a mentor at Stanford programs and some accelerators here, I see the same pattern. How to make founders here the the right knowledge in order how to build business here in the US, or maybe even what would you advise to focus on your first year here in.
I think it's different for each person. Personally, I think the idea of convincing people to listen to you is a losing battle. So I don't play that. But what we try to do is, if you establish trust with someone, if you trust me, you are much more likely to listen to what I'm about to say, versus I'm just a mentor at some event that you're going to, and we haven't established that trust. Then my advice is like noise. There's so much noise, right? There's so many people giving advice here. So that's part one, is it starts with establishing trust in some way. It could be by working one-on-one, it could be by being an investor. The second part is self-awareness on the part of the founder, right? Like you kind of just hinted on it, right? Like you had prior success, which led you to maybe believe that I don't need to learn. I've done this before. But then when someone told you, or at some point through self-realization, you came to that awareness of there's always something to learn, right? It could be something to learn because I came from Ukraine to US. I have to learn about how to do business here. It could be something new to learn about the domain, or it could be something new to learn because environment is changing around us all the time. I personally think founders who are always looking to learn are among the most self-aware founders. They know what they're really good at, and they also know where to seek help. They're consciously looking for, what is someone doing better than me, and how can I learn that, right? I think it comes from within. People telling a founder, listen to me, I don't think that's gonna change much until
So
that trust is built and the self-awareness exists.
when I came and people told me, like other founders told me, you should not go to the exhibitions in the traditional market because it will take you 3 years just to be recognized over there. They will start buying from you after 3 years. I was like, Let me show you how we do it. I did 100 clients from the exhibition in Europe. So I just know how to do it, but it didn't work. So I mean, I lost a lot of time, and this resilience that often is needed played a bad game with us. And I mean this part, in the same time, like when we raised our first money, we would rather hire another 3 developers than listen to someone who was a few steps behind us, who could tell us, let's do it cheaper, let's validate ideas cheaper, let's pivot maybe, etc., etc. And what I found is that many entrepreneurs become entrepreneurs just only because they did some work really good. For example, they were developers and later they founded a IT service company.
Sure.
So they never did the customer development. And even one of my investors, who is 100 million plus guy, he says like, what, customer development? So because he never did it, that worked for him. But other frameworks, lean frameworks and all this stuff, learn us another lesson. So first time founder, raised his money. What would be your advice to focus on?
I think I'm actually gonna just kind of piggyback on what you just said. Like going to the exhibitions for you didn't work, but in a different circumstance might work. There's no one playbook. There's no one way of building a company, one way of doing anything. I think a lot of this, a lot of advice is generic advice. And so my first reaction is, as an entrepreneur, I tend to ignore all generic advice. And so I put a lot more weight on, if I'm sitting down with you and let's say we're talking about building a community and you have experience building a community, the first thing I'm trying to establish is, what was the context in which you built your community? So when I hear advice from you, how should I contextualize that? If I don't have that right context, and if I'm not contextualizing it the right way, I will likely interpret that advice in a different way. And so it's important to contextualize first. The other part, I think, with a lot of immigrant entrepreneurs that I see often is, there's imposter syndrome, there's a fear of speaking about yourself. A lot of that is cultural, right? Like most of the cultures don't really support the idea of bragging about yourself. But once you get into being a founder, you have to do it. And you have to do it in a form that is authentic to you and is informative to whoever you're talking to. So it doesn't come across as bragging, but more as informing. Because if you don't inform me, how will I know how good you are at your domain or that one thing? So I would kind of approach it more in that context of, try what you want to try. Because just because exhibitions didn't work for you doesn't mean they won't work for anybody else. But if you start seeing a pattern of, these things have, in my context, not worked for anyone who's tried, there must be a reason. And if I can uncover that reason and see, I may still go after the same path, but I'm going with a different approach because I've understood the reasons for why it failed. That is an experiment worth running. But if I'm blindly like just ignoring, like others have gone through this path and hit the same wall and failed, and I'm gonna go do the same thing, that's like hitting your head on the wall, right? That's not useful. So um, yeah, I kind of look at it as a combination of
Yeah.
both.
Definitely. And what still do you have a framework you usually use as advice for someone? So I understood you take every company, every founder, you ask a lot of questions, then you see the combination.
Yeah.
And do you give any advices or you just answer the questions if they ask you?
No, it's a very engaged process, right? Like the starting point post investment, we all of our portfolio companies, we invest and then we do an onboarding call, and the entire Unshackled team is on this onboarding call. All the co-founders are on the onboarding call, and that's our opportunity to expose the entire firm and our resources, because now we've already made the investment, and this is the beginning of building that trust that I was talking about. So we show up with a lot of vulnerability. We start with, here are our values. This is how we show up. we are sharing with the founders how and when they can seek help, how and when they can reach out to us. From that point on, most of the initiative is on the founder, right? So, and all our founders are on Slack with us. They're in the immigrant community as well. So it is a very easy access approach. It's not like you have to email me and then I'm going to set up a call 4 weeks from now. You can just DM me on Slack and we can talk in 5 minutes. We just jump on a huddle immediately. We've made it as easy as it's possible. The initiative then is from the founder for this is what I'm dealing with. Would you be able to help? Right. And now one of the team members will say, okay, this person on the team has expertise in this area, so you guys should talk. Or no one on the team knows anything about this, but someone in our community is an expert at this. Let us connect you with that person, right? So we don't have to solve all the problems ourselves because there's a large community behind us. We can get others. So when we know that a founder is trying to solve a particular problem, we can get proactive and we can act on that in a way that is conductive to minimizing their time spent on solving that and see how best we could help them.
Let's better ask you, I'm wondering, what is the main source of founders?
It is a wide community. So, for 10 years, we've been building these networks. It started with meeting founders at universities, connecting with angel investors. Obviously, we are the only firm that does immigration support, and so we get a lot of media support because of that. If founders just Google how to start a company on a visa, they'll find us. So a lot of inbound connections come through that. But now 10 years of building these networks have compounded to very deep relationships. And so the source is mixed. It's university networks, founder networks. We've met 20,000 founders over this time. And so they refer their friends. It's really attribution is really hard. But founder community, immigrant community, university networks, our existing founders are, I would say, the biggest sources. And then we continue to hustle, right? We are always out and about trying to get in front of founders. I think I've spent half a year, at least half the time this year on the road, is because we want to be where founders are. And so we take the steps to continue to stay engaged in the communities where founders are hanging out. The founder community includes obviously one-on-one founder intros, right? So some founders who we invested in, a lot of founders who we didn't invest in, but when we met them, we were just human with them, right? We did the basic of replying to cold emails, getting on a meeting and being responsive. It's surprising how effective just being normal and nice is for long-term relationship building. So we get a lot of referrals from founders who we didn't invest in, but have a great relationship with, and now they're in our community. They're referring their friends. They're bringing in other collaborators. Yeah, definitely founders. I generally categorize as founder community as the biggest source.
There are so much information about how to craft a good pitch deck,
Mm.
but still many of them are so complicated. And very often when entrepreneurs come to Bay Area and ask me for introductions and I look over their pitch decks,
Yeah.
too complicated. And usually I can't do the introductions. I'm ready. What is the founder pitch deck that is ready that I can do an introduction to you?
That's a tough question. I usually say if you meet a founder who would benefit from meeting us, um, I would hope that you just make the introduction. We love meeting raw talent. I don't need you to think about you're taking agency to make a decision on our behalf of is this a good pitch or not a good pitch. And the reason is a lot of immigrant founders haven't perfected how to tell their story, right? They haven't. A lot of focus is on the product or some other variables, and they're not talking a lot about themselves. What is so unique about them? And when you really peel the onion, at the core of every company is the founders. That's what's going to stay constant. So what we're investing is not an idea or a pitch deck or a TAM. We're investing in the people. Unfortunately, most of the decks don't talk enough about the people and their uniqueness. So our process is designed to discover some of that, and we still make mistakes, and we may still not be able to see the whole thing. And that's the idea behind creating the community as well, because so Immigrate is a Slack community where we're housing founders that we're meeting, and this gives us the community is giving us an opportunity to get to learn more about the founders outside of the pitch deck and the application form, or the intro email, because we're seeing them in action, right? So in this community, people are sharing their idea. Someone else is reacting to that idea. Someone else is saying, oh, I can help you in this space. I have a friend who does X, and you may want to collaborate. People are taking leadership in different ways, and those are the signals that we're trying to see, is like, who's active, who's trying to help, who's trying to take leadership, who's organizing. My request to you would be, if there are founders coming your way and they're looking to start companies in the US, connect them to us, not so much to pitch, but more importantly to join the community, where they're going to learn a lot. A lot of these nuances that you're talking about are being discussed on a daily basis. We do a lot of programming there to help understand, like, what should be on your pitch deck and what is irrelevant on your pitch deck, for example. How to convey the story of yourself, right? Which is, I think, in the early stages, the most important missing part.
And do you also invest in founders outside of the US that are just going to relocate?
We don't actively work to seek those founders, but through networks, through connections. For example, we now, our portfolio founders or founders we met, they have friends in their home countries who are looking to come to the US to build companies. So we get intros. And yeah, I think about something in the 5 to 10% range of our portfolio started that way, where the founders were not in the US when we invested, and then we helped them come to the US.
How do you have so much time to speak with everyone? Or how do you still select who to speak with? It's usually, I know, you should be too heavy on requests.
It's a great question, except we know that there's a lot of opportunity in front of us. So the way we built the process is for velocity, and we continue to add to the team as we start tapping out on capacity. We'll add more people. We just added Fernanda a month or so ago, but the process is designed to, one, make it equitable to everybody. So if you go to our website, on the top right corner, you'll see Pitch Us, right? You don't need a warm intro to us. You just go to the website, fill that form, and at least two people in the firm will look at that information. Everybody gets a response. It's not a black box of like, oh, I'm just going to submit and nobody's going to look at it. If you introduce someone to me, I will still request them to fill that form. So warm intro or cold, the form gets filled, and that's how we keep the velocity on the process. Because every week, as we're seeing 200 to 300 of these pitches come in, every week, the team is now processing them, and they're looking for specific signals, right? Because when you've done this thousands of times, you've built the muscle memory of what stands out, what are we looking for. And it's hard to explain in objective terms because it's different, but we do that, and then from there, a decision is made to come in. Let's do the first meeting, which is a 20 minutes introductory call, and that's all about the founders, right? And we're trying to gauge their ambition, their passion, the authenticity, the curiosity, how quickly can they learn, what have they shown so far in terms of what they've learned. And then that gets followed by 2 more meetings to get to the final answer. But it is a very fast, responsive process to really just underwrite upside.
That's cool. And what's your conversion between those requests you get and meetings scheduled?
About, I think about 70% of the, or I should put it this way, about 25% of all incoming will have a meeting. That meeting could be the 20 minutes, or sometimes we do just a clarificatory call, a phone call, but we'll have some conversation. And then from that 25%, it drops to about 10% that go to the next 1.5, and then about 0.5% is what eventually gets investment.
5%?
0.5.
0.5.
Yeah.
Okay. What about the others? Do you give them feedback?
It depends. So feedback is a delicate thing, right? When you don't have that trust. So you for example mentioned how this one investor gave you the feedback, and by that time you had built a certain type of relationship with that founder, with that investor. If we have met a team a couple times, we've gotten to experience them, they've gotten to experience us, and we feel like they will receive the feedback well, we respond with very honest reasons for why we're not investing. But if we haven't met them, that feedback is not real feedback, right? And so in those cases, it's easier to not explore that. Where feedback does become important is in that community. So what we're trying to foster is, don't overweigh our reaction, right? Because we're an N of one. There's hundreds of investors, and more importantly, your customers, your collaborators are the ones that you should be listening to. And so the idea is, we're passing right now, and the reasons to pass could be many, right? But you're welcome to join this community, which is a founders only community. So there's a short form for it. We just validate that you are a founder, not a service provider, not an investor, so that it's a safe space for founders to just be themselves. When you join this community, you now start getting feedback from a lot of different perspectives. That is a lot more useful than feedback from someone who just looked at your pitch or your deck for a little bit. So it depends on the situation.
Here in Silicon Valley, we have seen many unicorns emerge. Here we have access to many people who have built, invested in, or witnessed the growth of unicorns firsthand. We know these stories not from books, but through direct experience. I believe this helps sharpen our ability to recognize billion-dollar opportunities and make us a bit more strict with founders and their ideas. And I've had the privilege of being a part of some exciting ventures. One of my investors, Googler number 21, Jack Levin, saw Google's growth from its early days. And together we worked on Zencrypt in 2022, later a project that reached a 100 million valuation in under a year with just 4 part-time people in the team and zero marketing budget, And so my question is, how do you evaluate it so early? What are your main criteria to look into founders that you feel can be a billion-dollar opportunity?
Opportunity focused on the founder is the important part there. So what we're looking for is people with really large ambition and high opportunity cost. So when you look at the combination of the two, if you have high opportunity cost, you are not going to spend your time chasing a small opportunity. When you extrapolate that, you have high opportunity cost, meaning you don't want to waste years of your life building something that's going to be small or make an impact on a small number of people, which then means you have high ambition, that you want to make something that is going to affect millions, if not billions of people, right? So the signals are really in, how do you think of ambition? What is your ambition? And what is your understanding of how valuable is your time? That's part of how our conversations go with founders. Included in that is what we're trying to learn is, how fast do you learn, right? So if you're doing something, you're building a product or a company, are you the kind who's going to wait for a year for to see if the path you're on is right, or you're taking signals real time all the time, learning quickly, making small adjustments, right? Those may not be pivots as such, they're just small adjustments, fine tuning, but along the way you're just continuously learning. And so in a month, you're at a completely different place in terms of understanding the problem, understanding how it plays a role in your customer's life, understanding if there's a business to be built in solving that problem, versus waiting for a year. That's what we focus on, is ambition, opportunity cost, velocity, learning curve. And we get those right, then we're backing founders who will, even if they're working on something that to us sounds like a bad idea, we don't have to tell them this is not a great idea. They will learn themselves very quickly. So we've done this where we thought, these are the right kind of founders, but their idea, we knew this is a low ceiling idea. So instead of telling him that, we introduced them to 10 potential customers. And in a week they came back and said, we're not going to pursue this. Instead, what we learned is there's a bigger problem at this other thing, and we're going to go build that, right? That just happens naturally with the right people.
Yeah, I think very often I say to entrepreneurs that you invest your time into companies. So investors that invest money are your partners. And so the portion and the balance depends on how valuable is your time. So the main question is how to increase the value of time. You can do it by building the right team, but getting knowledge and expertise, your background, your ambitions, your motivation, a lot of different things.
Absolutely, 100%. And the one thing that you just cannot replace or buy is founders' time, which is why all of these things that you mentioned, investors you bring on to your team, people you hire on your team, they should all be doing one thing, amplifying your time as the founder, right? If they're a drag on your time, you should not be working with them, right? So amplifying your time to create the maximum leverage so that you can do the things that you are uniquely capable of, and those people around you can do the things they're uniquely capable of, is really how great companies are built. Investors, founders should also appreciate that for an investor, you are one of X companies that they're going to invest in that particular fund, right? Each fund is 20, 30 companies. For you, it's an N of one. You're building one company. So your opportunity cost in terms of the success or not of that company is significantly higher than any investors. They're investing capital, which is somebody else's capital, but their time is not fully committed to one company. They've committed their time to 30 companies. So if you're not one that makes it big, but somebody else does, that's fine. That's the nature of the sport. But for the founder, there's only one that you're dedicating all that time to. And that's what we like to find as founders who will learn that very quickly. That's what we call a high upside founder, is they'll learn that very quickly and figure out, this is not a great use of my time. I need to be focusing on bigger problems.
My last question would be about the culture of building the network here in Silicon Valley. What would be your advice to founders that just moved to the area, how to build their network?
It's very different from, for example, when you moved or when I moved. I think today you have ready-made a lot of communities that you can join right away, both in-person communities and virtual communities. We're building one such community, and we're trying to aggregate. Like, our ambition is to become the super community for all immigrant entrepreneurs, because by aggregating, we create more value for everybody, for the community organizers and for the entrepreneurs in those communities. But as a single entrepreneur, coming back to your question, is join these communities and take advantage of the inherent network. So shift the network thought process to the community thought process, right? And what starts happening is the tribe around you starts coming together, because it's much faster to meet people in these communities and identify who you want to really hang out with, who do you want to collaborate with, who do you want to have fun with. It's also important to note that when we leave our country and come to the US, there's a purpose behind it. We have career ambitions, we want to build a company, and at the same time, we're still human, right? We still have all the social needs that we had before. We have the need for fun that we had before. And it's even more important when you're an entrepreneur, because there's so much pull on your time that you tend to not take care of yourself. It is incredibly important to be in communities that give you an opportunity to be that wholesome self. And what we're starting to see in our community, for example, is there's a lot of talk around how to build companies and very thematic aspects of entrepreneurship. And then there's a lot of culture, right? Those connections about, oh, walking club, running club, a squash club, poker club. People need to have that social affiliation. And all of us who've left our friends and family back home, we got to find our own friends and family here. That's what we're trying to foster, or we're enabling fostering off in the community. I think it just makes for founders, if you when you join these communities, approaching it non-transactionally. So, when you're building a network, it can be very transactional. I'm meeting investors, I'm meeting other founders. Okay, that's for a specific purpose. When in a community, it can be more wholesome. And when you shift that, when the mindset shifts from being transactional to being connected with people, magic happens. Magic is in the form of, you may meet someone who you started going on runs with, and then you learn their roommate is an expert at what you're doing, and like that's the magical connection that really leads to, oh, we're going to team up. Or my neighbor is an investor who really likes the space, and I'm going to introduce you. Those kind of non-transactional things happen through community fostering. And I think there's a ton of opportunities today for founders to figure out what communities give them the most value, and therefore which communities they want to spend their time in.
Thank you very much. I enjoyed our conversation. Many thanks resonated with me. I'm really impressed by how do you approach founders. You see, how can you recognize founders so early and trust and support them? And I would love to give you some introductions to founders that are capable to build unicorns, I know.
I would really appreciate that, and would love to welcome you into the community and welcome your friends and founders into this community. It'll be a lot of fun to collaborate.
Thank you very much.